Hello, hello. Mic test, mic test. So, welcome, guys, to this 28th edition of the Trading Opportunities webinar. This is Nirav. And before we move any further, let me just quickly check the audio at my end. So, it looks like at my end, at least, the audio is working fine. I will wait here a few seconds until further audience joins in. So I see there are now participants in the chat section. How are you doing, guys? And also do let me know what is the status of audio and video at your end of the feed. How are you doing, guys? Hello, Sumar. Thank you for the confirmation on the audio. So now that we have a confirmation, let's just quickly get started. Before we start with anything, let me just get done with the legalities. You can see the disclaimer here on screen suggesting that all content presented here is purely for educational purposes. We are not soliciting any buy or sell here. If you do want to use the views presented here for your trading, investing, or any other purpose, you yourselves will be liable for your profit, loss of profit, or any other situation arising from the same. So that's all for our disclaimer. You can read the rest to yourselves. Now, I would like to get started with the about us, followed by EURUSD and everything else. But before that, I'll just wait for one confirmation at least about the screen. I have gotten a confirmation for the audio. Can you also confirm, Samar, if the screen is also looking clear here? And yes, we will cover Nifty, of course, as we always do. That's the second last chart we discuss. What about the audience on YouTube? I can see people are online here. Little low activity in the chat compared to our past webinars thus far. Okay, thank you for the confirmation. In that case, let's just quickly get started with our introduction, which will be followed by our discussion. Okay, guys, so here we go. Let's start off with a quick introduction. My name is Nirav Yadav. I'm the admin and owner of 50eyes.com or 50 Eyes Market Analysis, which is the name of the YouTube channel, and 50eyes.com is the name of the domain or the website. So here I have been presenting my views on the markets for the past 7+ years, right? And the current webinar which you guys are seeing is broadcasted live on YouTube, which is 50 Eyes Market Analysis. Handle name is @50 Eyes. It is also being broadcasted on TradingView Live simultaneously. And this is the 28th in the series of these trading opportunities webinars. As the name suggests, in these webinars, we go over some currency pairs, crude, gold, some indices, and Bitcoin. And we try to determine if there is any trading opportunity available in those counters, as well as Elliott Wave perspective we discuss. Right, you can check my past work by hitting the live button here. All the webinars in this series are available over here, right? Apart from this, a little bit more about my work. I am also the author of the book Think with the Markets: Secrets to Achieve 80% Plus Accuracy Using Elliott Wave, which is available on Amazon Kindle platform. You can just visit Amazon and type in the name of the book, or just go to my website and click on book Think with the Markets over here. You can even use the links present here for directly checking out the book. And lastly, and most importantly, I have a consecutive 6-year plus track record of 80% plus accuracy. Something I would like to highlight here, because generally in this industry, even accuracy of 60% plus is considered very high. And here I have 80% plus for 6 years, right? And you can just go towards the bottom and check all these spreadsheets. But just to give you an idea, you can check any of the spreadsheets, check the dates, name of the instruments which were discussed, price at the time of discussion, analysis, what happened after the analysis, and you can check the actual video by clicking on this link. And similarly, you can just scroll down and check any of the dates, any of the instruments, what was the analysis, what happened afterwards, and the video link. So this is the way these things are compiled, and just showing it off just to establish the fact that I'm quite good at what I do, right? So with that out of the way, and let's just now head over to the way we will proceed with the webinars. Hello, Pawan. So yeah, guys, before we proceed, one final confirmation on YouTube would be better, because we have had confirmations from TradingView. Pawan, are you able to both check out the screen as well as hear the audio properly? If so, I would appreciate if you can confirm the same. So guys, let's just have a quick outlook of how the webinar will proceed. So as always, we will go over the charts of Euro USD, EURCAD, USDJPY, EURJPY, crude oil, gold, followed by S&P, Nifty, and then Bitcoin. Right. First of all, I'll discuss what we were thinking in the last webinar, what has happened currently, and if there is an updated Elliott Wave view, I will discuss that as well. And at the end of every discussion, I'll ask you guys if you have any queries. At that point, you can just let me know if you have any doubts, or you can just type in understood in the comment section so that we know you are all on the same page. Now let's head over to our actual chart discussions, and let me quickly load. It is already there. So this is our first chart, and thank you Fraser and thank you Pawan for the confirmation. Hi Anton, hope you are doing well. So guys, let's now officially start the webinar with our first chart, which is Euro USD, which you can see on screen. In the last discussion which we did on Euro USD, the idea was simple. It was just hold the longs if you had entered them already, and keep in mind our actual entries were around the level of 1.0503. So this is where we first initially suggested the upside movement. This was target minimum, this first blue line, and this was the next target. So since our target was already achieved after our entries at 1.053, 0503, sorry, the idea was that book partial and trail the remaining, in the expectancy that if the market continues in the upward direction, then it will hit probably the target too. So thus far, it has not done anything unique. It is still holding the trail. It is still sideways. So it is unclear if the fifth is complete or it has more upside remaining. In any case, personally, based on my entry, the trail was around, or the initial trigger, the trade was around 1.0735. If you have your own entries, you can just trail it accordingly, right? And as far as the Elliott Wave view is concerned, there is really no change here, but I'll just quickly summarize it for those who are joining in for the first time. So this is our point of reference, or the starting point of this analysis, 0.95310. And from here on, we seem to be having what we would call a possible impulse in the upward direction. So nothing really new here. Impulse in Elliott Wave terminology is a 5-wave progression. The wave one is called the upside movement, right, which is over here. Then the downward movement called the wave 2, which is over here. Then the another up move, which is called the wave 3, which is placed over here, and followed by the fourth wave, which, as you can see, fifth wave will be following it. Should take out the last high, which it has already done. So that's basically what was our analysis so far. Nothing really to add here. Let me know, guys, if you have any specific thing to ask on this chart. If not, please do type in understood or clear. Then we will move on to our next chart of EURCAD. Hi up there. So, are you guys still with me? Able to understand? Antoine, Fraser, Pawan up there. Summer, let me know quickly in the comment section. Thank you for the confirmation there. Not sure what's happening with YouTube. Okay, there it is. A little bit delayed. Thank you, Fraser. So let's head over to our next chart, EURCAD. So EURCAD, if you guys are not following, I'll just like to quickly point out that not last to last time, one of these days in one of the webinars which we were conducting, we suggested that once this market goes below this green channel, then we will have a short setup. This was our target one. So basically, long story short, we were able to capture the movement from this point to this point. After that, sorry, not this point to this point, from here to here. After that, we suggested another short over here, and we were capturing it from here to the target 2, which is marked by this blue line, right? So these are the two movements we have successfully been able to forecast beforehand and push our trades on. All right. So at this point in time, our analysis suggested that this possibly looks like a wave X complete here, and that generally suggests that if that's the case, then it should take out the last high. So it has done that, and our short-term setup was that if the market goes above this line, above this level, then we can have short-term longs. Right? There were no clear targets that I had given because it could also either go up, or secondly, it could just go sideways back again within this range and keep progressing within this range for quite some time before heading up. Right? So based on that reasoning, we were not very interested in it, but because we discussed this chart, our bias was that short term wise it's a long. So to add on to that last analysis, it has gone up and given us intraday longs, successfully taking out the last high. Hence our shortest or minimum targets have been achieved. As you can see, the last high has been taken out, which was this level, right? So what's going on at this point is I personally have no interest in it, because not at least at this point, because while it can go straight up, there is the secondary possibility, as I suggested, of sideways movement. And since this box range is in itself quite a big range, so if I take a long here and it does not work out, then I will be stuck for quite some time. So that's our take on EURCAD. Possibly swing longs, but sideways movement possible before the longs take off. Nothing really to add on EURCAD. Generally speaking, it's better if we go ahead with the short terms intraday trades here instead of trying to catch the swing. So there might be better opportunities elsewhere. There are better opportunities elsewhere actually, which we'll be discussing as we continue further. Let me know, guys, in the comment section if you have understood this discussion, or if you have any doubt before we move ahead with the USDJPY. By the way, that's our take here. Straight up or sideways and then up. Antoine, Fraser, Pawan, just fire up the section, right? I'll just wait for. Okay, thank you, Norm. Thank you for the confirmation. Let's head over to the next chart, USDJPY. Okay, so guys, in USDJPY, last time when we discussed, one second. Yep. So last time when we discussed this chart, our idea or analysis was suggesting that this was a possible wave 4, and we were expecting that a wave 5 will pursue with the expectation of the target around 126.910, right? And before I discuss the current progression, I'll just like to point out a few more things here. Firstly, that we were able to capture this short. This was our trigger. around the level of what is this 130.88 something, 130.86 actually. And below this was the idea that this market should continue further lower, which it did, right? We had a target minimum here, which was taken out, and then it went further lower, right? So I'm pointing these things out just to keep context for people who are joining in new, and to point out the importance of joining these webinars live. Okay, so now getting ahead with the discussion at hand, it has sort of done a movement which is not very, what do you call, expected. As such, we are expecting that this market is a diagonal, and in the sense, proper nomenclature, it will be an expanding ending diagonal, right? So we can just type in expanding ending diagonal here. So in the case of expanding ending diagonal, the general setup is that until the 2-4 trend line is held, the analysis is suggestively working, right? So this 2-4 trend line, as you can see over here, has still not been breached by the price action. So that basically means that the expected downward movement, which is the fifth wave leg, which should, in our understanding, take out the last low of the wave 3, is still pending, right? So if this analysis still holds, then that would mean that this market should take out the low of 127.319. Right? And if it continues further down, then our next target is over here. We can, of course, evaluate further targets, but that's not much of a point here. Here, we are more interested in the actual direction. So these are the levels to look out if the analysis is working. And given that it has given a bit of a strong move in the other direction, not exactly something that we were expecting on this counter. So that basically means that if the market goes higher than wave 4 low, that shall invalidate our count basically, and at that point we will have to reevaluate the situation. Basically something else might be happening at that point in time. So that is our take on USDJPY, right? Current incoming shorts, if you are holding, that will be the invalidation level, right? If you were holding from better positions, your trails would have already been hit, right? So from a fresh perspective, it's basically more of a wait and watch. We would like to see some bearishness before re-entering shorts. If you are already short, then we have discussed the invalidations. That would be all for this discussion. Let me know, guys, quickly in the comment section if you have anything to discuss here before we move over to EURJPY, which is looking a little bit more bullish than the USD counterpart. Norm, Fraser, and Toyin Pawan, you guys still with us? Let me know. And also to you guys, before we move further, make sure you have hit the like button on the respective platforms you are on, right? And also once the webinar is done, I will appreciate that if you guys can spread some word and share the content. Okay, thank you for the confirmations, Norm. Fraser, let's head over to our discussion on EURJPY. So EURJPY, last time when we discussed, the directional view was more or less the same as it was on USDJPY. We were still expecting bearish movement on this counter, right? And specifically, we were thinking that maybe this is the wave 2 here, and that would suggest basically further movement down for the wave 3. Our targets and everything is already placed. You can see the T level is basically our target level at 135.96, right? However, this strong up leg has seemingly suggested that we may be having a little bit more to this configuration than what we thought. So what does that basically mean is that if you guys are following me from the past webinars, then I'll point out two things. First, that our initial trade for short entry was over here at 142.216, and then we were able to capture this leg down, right? But more importantly than that, if you are following me from the past webinars, I have mentioned previously as well that from this point of reference, this may be heading as an A up, B down, and then C up, right? As a sort of a flat structure. So in Elliott wave terminologies, a flat pattern would be, if this is a starting point, then the flat pattern would be something that goes up, then almost near the low of the starting point, and then almost near the high of this leg or the first leg. So almost near the high, and it can even take out the high a little bit, right? That is basically a flat pattern. We label it generally as an A up, B down, and C up. So in this particular case, as we have discussed previously as well, I had pointed out that there is a possibility of a wave A up, right, followed by a B down, and then the C up can take out the last high of wave A. Reasons we had discussed that it is possible that this market still goes and tries to take out the 50% level and touches the 61.8. Now keep in mind 50-60, I'm talking about the retracement of this leading diagonal to the downside. Now for those of you not much familiar of what I'm talking, I'm basically suggesting that this is the price zone or the resistance zone that we have noted previously, right? And the analysis that it might take out this last high and maybe go higher, it is this price zone, comes from the fact that generally the market will reverse within this zone, and in most cases by touching the high of the zone. So since that has not happened thus far, the analysis still persists that it may still go higher, go within this range of 144.269 to 142.924, and then give the reversal, right? And second hand, it's not really always required to do that at, so that's why we can also say that it can reverse trade off from here as well. Okay, so but looking at the current bullishness in the situation, I will like you guys to consider this possibility on your analysis or on your charts and in your analysis. Just correcting myself there. And if you do that, this becomes a sort of a volatile situation here. I personally would not like to hold a swing short with this big of a stop loss, right? So maybe I'll be interested a little bit near the lows, right? Or if the market has actually entered the 50-60 retracement level, then I'll place an alert over there as well that it has breached the last recent high. So all in all, this is the expected direction. But trading wise, this counter I think is best left alone for a little bit. That's I think quite a detailed discussion for EURJPY. I'll wait for your guys' confirmation. If you have any doubts, please type in. If not, do type in understood or clear. Before we move over to crude, which will be followed by gold, S&P is 500, Nifty 50, followed by Bitcoin. Thank you, Jill, for the confirmation. What about the audience present on TradingView? Okay, guys. So I'll not waste any further time here. Thank you, Fraser, for the confirmation. And I'll just quickly load over the chart of WTI's crude oil, which basically is not really doing anything new. So crude oil, as you can see over here on screen, last time our discussion was that we expected that this market was going inside a possible diagonal structure. So those of you who are joining in now and have not been following this series, I'll just quickly point out that this is our starting point of reference or starting point of analysis, 76.60. From this point of reference, we were expecting that this market is going up for an A, down for a B, and possibly up for a C. So basically, running flat is what we expected or we are expecting right now. Once the structure is complete, we expect the fall in the market, right? However, the fall and everything is in the distant future. What currently we wanted to see was a possible diagonal structure. So a diagonal structure would generally have 5 waves inside of it, generally with the fourth wave overlapping the one, right? So currently our labeling is this. This is the one, this is the two, and will be followed by the third, will be followed by the fourth, will be followed by the fifth, right? However, it is not really becoming or performing very clearly, right? But if we were to go along with this conjecture, then I'll just make some rough lines here. Okay, so roughly speaking, something like this is what we are expecting on this counter. One of the two possibilities, right? Secondly, as we have already identified the level between 82.12 to 84.93 as our resistance level. Hence, any intraday shorts or intraday longs we enter, we would like to very much get out near the upper half of this zone, of this resistance zone, right? So these are the two main points. And just to add on, in crude oil, if you guys are not following me from the past webinars, because this webinar is the 28th in the series of these webinars, which we conduct on Monday, Wednesday, and Friday at 2 p.m. GMT. Then I'll just like to point out that we were able to capture part of this fall and parts of this up move here and here, right? And some other minor moves here and there. But these are the three main moves that I recall which were significant enough and we were able to catch. My point being that if you are watching these webinars, it is best that you follow them live when they are actually presented live on my YouTube channel, 50 as Market Analysis. And just to clarify, we go live on Monday, Wednesdays, and Fridays at 2 p.m. GMT. Right. So WTI crude oil, that's our take. Still expecting sluggish small upside movement. Resistance levels all discussed. I don't think much to add here. There is an alternate view of the wave X continuing as a possible complex, but even in that case, yeah, one or two things will change over there. If the wave X is continuing as a complex, then it might even show a fast leg down before a move up for a flat maybe. But more or less still sluggish upward movement should be seen. Let me know guys if you have any doubts on this counter, or if not, then please do type in understood or clear in the comment section. And as always, I like to request you guys to hit the like button on the respective platforms, and also do make sure that you share the content afterwards. It will be best if you share it with 3 people in your circle. That will help us increase our reach exponentially, and at this point in time, it was definitely required to grow the channel and get more audience. Thank you, Jill, for the confirmation. Yes, Anton is saying nice call for crude following last analysis. Thank you, Anton. Norm and Fraser, thanks for the confirmation. Let's head over to our next discussion, which is the extremely nice chart, right? Gold has been really good to us, or should I say my analysis has been good to us. Just kidding. So yeah, I'm saying this because if you are not following for the past webinars, then I would like to just point out that gold has literally done all the major moves that we discussed, right? So we have been able to capture parts of this leg up, right? Then this, and this move literally we were able to capture from around 1780 to 1810, right? So literally this 30 points we were able to capture. You can check the webinar around this time. And then afterwards we were able to capture part of this leg up, and there was let me focus in. We were able to capture some short-term movements as well. This fall as well as this rise again. All of them. I'm not kidding. You can just check all the or any of the webinars near these points which I am mentioning. This one is around 1868, and you can check that I have already forecasted it. Right? As a matter of fact, this was the thumbnail of one of the webinars. Let me just quickly check one thing here. So this is the thumbnail of the webinar we are in live right now. This is again gold chart, and what you see here is that we are expecting an upward movement here, right? This is based on this image when the price was at 1908. This was the screenshot we took, and the target minimum was at 1930. So it has already achieved that. So I'm showing it to you because although our analysis was suggesting upward movement, pinpoint reversals cannot be discussed, because I mean, I do discuss and post them in my Slack private group. But since these webinars are only conducted 3 times in the week, pinpoint reversals can happen any time of the day, right? So I have to show this to you. And I wanted to show you interesting other moments which were, yeah, there it is. This is again the gold chart, and this is again the upward movement. In the 25th webinar, we discussed that. And yeah, this is based on this complete chart. When the price was at 1883, we suggested further upside. And you can see now the upward movement is already there. And by the way, this is the 24th webinar, again the gold screenshot. At this point in time, the price was 1884. And we were suggesting that it will first go down and then go up. So now you can see consecutively, if we put these images together, first we were able to predict this leg down, then this leg up. Let's see. Yeah, so this leg down happened here, and this leg up was in progress, and it is still progressing, right? So the whole thing was here to show you guys the level of accuracy we have achieved with these public webinars, right? And I believe some of you guys have also been able to capture these moves. If you can also confirm that in the comment section, that would be nice for our new viewers, right? So that was a little show off of our past achievements. And I have to also tell you what we are at right now. Till the last webinar, we had 27 trades in 26 webinars. So let's just do it. Second, EURUSD is still stuck. EURCAD is still not interested. CL is also sideways. Not sideways, just stuck. Gold has worked out, so +1. S&P, we will have a look, followed by Nifty, etc. So far, in the last 27 webinars, we have captured 28 trades, right? So that's extremely good number of trades from my personal trading experience, I would say. So getting back to the analysis here now, what do you think of this gold series of consecutive longs which we have achieved, and so far our success with these webinars? That would be nice to check in the comments. Okay, so not interrupting further with our analysis. Basically, the whole story comes down to this, that we already are able to catch a way too many correct moves on gold. So if you were following even from a little bit after we started this webinar series, like in the middle or something, or even for the last 4 or 5 webinars, you should have been able to capture some good moves here, right? If not, the fault lies upon you, doesn't it? So anyways, jokes aside, at this point in time, it has achieved our target minimum, right? So now that the target minimum is achieved, if you had existing long positions, you should have already booked some profits, right? And already booked profits, then again the remaining trails should be based upon your entry. So nothing really to comment here from my end. This trade is done already, right? And I'm not really interested in adding shorts, although short term wise there might be some sell off incoming on gold, because if we look at this count overall in the complete picture, this looks like a possible wave 3 is over here, right? then that would suggest there will be a wave 4, and that would suggest that there will be a fifth in the upward direction. So basically, the overall trend still remains to the upside unless we are proven wrong, right? I personally think that as long as this market sustains above 1900 level, we should not worry above this price action. It can do sideways, complex, or whatever, but our upside still remains intact, and we should be able to see more upside as long as this count holds or the 1900 level holds, right? Next immediate targets 1950, next one is 2000, and above that we don't really care at this point. So gold is basically, conclusively speaking, wait and watch for new long opportunities, and before that the market can consolidate sideways, because if the fourth is in play, then 4 can be complex and whatnot, right? So possible sideways movement before the new up leg. However, I have to say one thing here, that I'm not really very convinced about the completion of this wave 3 here. I think that wave 3 should have given a little bit more upside, somewhere near target level of 1950. It could have gone, not exactly the 1950 level, but a little bit above than the current price action it should have gone. So based on that, would not be surprised if there's a straight off takeoff, right? But overall, I'll just wait with an alert placed near the last high so that we do not miss out if there is a sharp rally, right? And this is the expected moment. I'll just draw it. So let me know, guys, in the comment section if you guys are clear on this analysis of gold. If you have any doubts, do type it in as well. On the off chance that this market is trying to be deceptive, it can even head over to 1880-ish levels before the reversal. But I'm not considering that as our main possibility. Okay, thank you, Norm, for the confirmation there. Thank you, Jill. Hi, Casey, on TradingView. So with that out of the way, let's just head over to our next chart, which will be the chart of S&P's 500, followed by Nifty 50, and the last chart, Bitcoin. So as you can see over here on screen, we have the chart of S&P's 500, right? And our long-term analysis sort of seems like is still in play. I'll just quickly reiterate for those of you who have not been following these webinar series. I think within the first iteration of this webinar series itself, or the first, that is number 1 trading opportunities webinar, which was conducted, we were able to track this count, and it has still being followed, right? So more than 2 months ago, I think, when we started this webinar series, we were able to catch this count, and it is still in play as it is the structure by structure movement. So let's just quickly reiterate it for the sake of those who are joining in new, and for the revision of those who are following. From this point of reference, the starting point of the analysis around 48.25, we are expecting that this market has formed a possible diagonal. Furthermore, we expect that this could be A, B, C. By the way, when the diagonal gets complete, we call it an A, in this case, at least. And furthermore, we have the understanding that either the B is complete here or the B is continuing as a possible triangle. So if the B is complete here, then there is no need to worry. It should just fall for the next leg down, which should take it lower than this low, 34.85. However, in case the B is continuing as a triangle, which may very well be the case, right? If that is the case, then more sideways drama can be seen, right? Basically, a triangle pattern, those not familiar with Elliott wave terminologies, is that if this is the starting point of the triangle, then the pattern will look something like this, right? So the first leg up, this leg is called the wave A. Let's call it small a. This leg is called the B, this leg down leg, this whole move. This one is the C, and we expect the D might still be continuing in the downward direction, right? So if the D is continuing in the downward direction, that basically suggests very clearly that this market should, on the shorter time frame, because this is 4H, so on the 15-minute or 1H, our targets would be more immediate, and they will suggest that this market should go lower than the level of 3768. Right. So short-term buys, we are expecting shorts in this counter if this count is being followed, which does seem to be the case thus far, right? And overall, if this is current, then we expect actually much lower movement, as already discussed, lower than 3500 actually. Let's just say that looks simpler on the chart. So that is our expectation as of now, right? Now coming to the analysis which we discussed in the last webinar, I think 1 hour should do. So in the last webinar, we were looking at it in a little bit more detail. We were looking at it on this smaller time frame, and we were expecting two things. Right, the running analysis was that this was a diagonal here, and the setup for the diagonal generally is that as soon as the trend line is broken, we want to sell it. Right. So this was our main count. If you were available or present in the 26th webinar, that was our main count. However, in the last webinar, which is the 27th webinar, I saw that even after the break of this trend line, this market was sort of trying to take out the high. It actually went almost 90% plus near the high, as you can see. So this, in my observation, was not a very good indication for the shorts. But it comes out that the bulls in this counter were actually uh, having the knowledge of this fact that people don't want to hold their positions till the 90% retracement, generally speaking. And they took advantage of it by making a pattern like this on chart, right? So long story short, even though we were holding, or I was holding bearish view from the get-go from this level, right, from 3840, and the market was around 4000 plus levels, they did find a way to deceive us, right? Of course, when the fall started and the market had gone lower than 3970 levels, I realized that the count which we had originally is playing out, possibly the wave D down, but it was a bit like the best opportunity had been lost. Of course, there has been a movement below that, but as I said, we were tracking it for quite some time for shorts. So a little bit more profit would have been expected on this counter. But anyways, coming to the position now, the most, what do you call, the simpler trade. The most simpler trade generally is that once the diagonal is complete, you wait for a ABC retracement, and once that is complete, you leave it. So in this case, since the diagonal got completed over here, and this is an A down, B up, and C down complete, the safe zone is over. The targets which I discussed previously are swing targets or swing side shorts, which are still there, but the proper entry would have been to take, let's say, 10 lots here, roughly speaking. And if the 10 lots you have taken here, that once ABC, you expect that the C leg is complete, you take out partial positions, let's say 4 or 5 lots, and then you trail the remaining based on your entry. Right. So those trails we can keep carrying forward. And if the market continues down, then we can keep holding them and keep trailing our stop losses. That's generally the way we will like to trade a thing like S&P's 500 for now. Right. So with that, coming back to our current chart, it looks like the safe zone is already complete, but I think that this is still heading lower, right? I will personally like to wait a little bit for new entries. If you are already in shorts, then it's good. Then you can just keep trailing because the movement has been very big after partial booking, of course. So for new shorts, I'll just wait a little bit. And if it continues down, then our updated view is very simple. We are expecting it to be a zigzag down. So guys, that is all for our discussion on S&P's 500. Let me know if you have any doubts on this counter. We have discussed the swing side targets on the downside, and we have discussed some other possibilities as well in the shorter time frame. Whether we have covered it from good amount of past data, so this also brings us a long-term analysis actually. Thank you, Jill, for the confirmation on YouTube. And guys, before we move over to our last two charts, which are Nifty 50 followed by Bitcoin, I would like to request you guys very seriously that kindly do hit the like buttons on whichever platform you are on. That helps us increase our reach. And even more important than that, please make sure that you are sharing the content with at least 3 people in your circle. That is, if you have 3 WhatsApp or Telegram or whatever traders groups you are on, if you are on, then kindly do share the links in them. If not, then social media. If you are on Twitter, you can just retweet my tweet or just share the link on your Twitter with the relevant hashtags. Or on Facebook, you can do the same thing again. Right. So that is definitely required for us to increase our reach with these webinars. Please note a lot of effort goes into making these webinars publicly available, and definitely a little bit more reach is required to continue doing all this work. Okay. So that was my request with you guys, and let's just quickly check the comments before we head over to our next charts. So Antoine has pushed a comment saying B waves PX triangle seems to have 5 tiny waves, but hard to be certain B wave of the triangle. Let me quickly have a look at that. So yeah, it can be taken actually, this leg, I think if you're talking about, it can be taken in 2 ways. Either you can take it as a complex or 5. So yeah, that is a possibility. We cannot relegate it as this point in time. If that was in 5, then of course the C complete will come into play. I think on the futures chart, I have the C as a secondary count with a question mark. I'll just push it here as well. Currently, it's questionable because of lack of clarity. So yeah, but that is relevant count. And for those of you wondering what we are talking here, we are suggesting that if this is the ABC complete, because this looks like another count in our alternate count, we can take this as C. Then in that case, this can take off. But still, there is a chance that it will take off after giving this leg down. So short term wise, we are still looking for possible selling opportunities here. I think ample discussion for just one instrument. Let's head over to the next chart. Dave is asking on TradingView, bro, I want to learn from you personally. Contract, I want to learn. Yeah, Dave, I'll just like to mention that our training program is due to start at the end of this month. And you can just contact me if you are serious enough by using the training program LT page. You can send me the request with all the relevant details and I'll get back to you via email. Right. Do keep in mind, currently I'm only working with people who have gone over my Elliott Wave video course, which is available over here. Right. If you have any further doubts, please make a detailed comment using the contact us page over here. If the comment is half baked, like want to learn or something, then you possibly will not hear a response, right? Do try to be as clear as possible and I'll get back. So yeah, one thing regarding the website, I wanted to let you know, guys, that what do you call, single session bookings will also be making a comeback on the website. They have been removed a long time ago. I was not interested in that at that point in time, but it will be available back soon, right? Just something to give you a heads up. Heading back to our discussions, now let's quickly head over to the chart of Nifty without any further waste of time. There it is. Nifty is 50. Okay, so a few things we would like to clarify here. First of all, we had been talking about it since the last so many webinars that we are not interested in any longer until this market takes out this last range. Basically, you can just take the last high itself around 18 to 60. But generally speaking, if the market comes near this range and sustains even here, then that generally is a suggestion that it is going to break the high. So that's why I drew that sort of rectangle. But long story short, there is still no confirmation on upside 18 to 64. And in the last webinar, we were thinking that impulsive move might come into play, but that was based of the fact that S&P will take out the last high. It never did do that. It never triggered the longs, and hence there were never any longs in Nifty as well, right? So long story short, Nifty, we still think actually there are two things that are possible. So let me just quickly push them on the charts. By the way, there are some alternate views. I will not be discussing them. Kind of goes beyond the point of discussion of these public webinars. So the current view is that we may be having a wave X here. Maybe it's continuing sideways, not really much of an issue. If it is an X, then we expect new leg down, which should take out the last low, 17,764. So this count is still solid and valid, right? Only point this count becomes invalid is, as I said 2 times earlier within this webinar itself, is when it takes out 18 to 60 from the upside, right? And personally, I think even that is not required. I think if it goes above 18,176, then I personally think that I'll be looking for longs instead of shorts. Why? Because there is some more personal proprietary analysis that I have done. I will not go into detail of it. It again goes outside of the scope of public discussions. But just keep in mind 18,170 is 171, whatever this is an important level. Actually, it's 178 is something. Is an important level, and I personally will be interested in taking longs if it is crossed to the upside. Actually, not even crossed if the market goes near that level. So in Nifty 50, until proven otherwise, we will look out for intraday shorts. Above 18,170, I personally will be looking for longs, and above 18,260, we will have the confirmation for longs. That's quite enough for the discussion here. Let me know, guys, if you have any specific doubts on this counter before we head over to our discussion on BTC. By the way, I was able to check past movements of the upcoming budget, which will be in February. And this analysis do sort of fit in with that as well. Probably we'll discuss it in the next webinar. You still have some time before the budget comes in. Okay, so Anton is saying I like more this one. I think it is for the S&P's count. Yeah, Anton, but the fact remains that we have to consider both of them. Taking a liking at this point, I think, is a bit premature. But anyways, yes, we should all have our own biases. Otherwise, how will we trade, right? So long story short, this is our conclusion for Nifty 50. I'm still waiting for confirmation from you guys on this chart. Anyone here on YouTube or TradingView can confirm? Because sometimes when the responses are late, it is unclear if the internet is still connected or not. Thank you, Jill, for the confirmation. Finally, let's have a quick look at our last chart, which is the chart of Bitcoin, BTC. USD. Now, see, if you are not following us from the last few webinars, I'll just like to quickly mention that we were able to capture this leg up literally within this box range, and the price target was at 21,590 something, wherever this white line is, right? So we were literally able to capture it. You can just check the webinar which was conducted around 8th January or 9th January, whenever that webinar was. I have specifically mentioned the price targets. I have specifically mentioned this movement, and I have to point it out because I know some people will join in new and they may not have a context of what we do here. So that's just something I need to do. Yeah. So now when we look at it at the current point in time, as I have already mentioned, that this is what we expect: A down, B up, C down, right? So that is the expectation, but this market has not really shown a clear weakness as of yet. So see, our primary bias is that this market is heading for more downside. We will go and say that this is possibly not the case if the market goes and gives a strong move above 23,200, right? Let me just quickly write that down as well. So if the market really goes higher than this, then we will expect that the bearishness may have been taken out and a new swing high might be in play. So basically, long story short, until proven or wrong, that is basically until 23,200 is taken to the upside, we are on the lookout for shorts, right? We need to see some more weakness for actual entries. And basically, that's about it for this discussion on Bitcoin. If you want to check out the bigger picture, I think we have discussed it in the second or third webinar in this trading opportunities webinar series. For the current action, price action, we are expecting that possible triangle, which will be seeing one leg down. Not much to add, and I personally don't trade this counter actually. That was all for this discussion, guys. I'll request you again to hit the like button. It is very important that these algorithms pick up our content and we get more audience. And even more important than the likes is the shares. I expect or request you guys that you share with at least 3 friends, colleagues, or groups. 3 at least. 3 is important because if everybody does their part, we will have an exponential reach very soon. So we would like the channel to grow, and with growing channel will come more content and more good stuff for you guys. So that's about it for my requests and my analysis. I hope you liked it, and I would like to see you guys live again in the next one. So take care, guys, and bye for now. You're welcome, Norm. Yes, Antoine is saying, yes, of course, Elliott is a game of probabilities. Exactly. Actually, on that note, I have discussed the concept of probabilities and how we actually look Elliott wave with probabilities in the book. I'm just pointing it out because there's a chapter on probabilities itself in the book. So you can check it out by visiting my website or just going to Amazon and typing the book name, Think with the Markets. Secrets to achieve 80% plus accuracy using Elliott waves. Guys, I'll sign off now. Enough jibber jabber. Okay. Excellent and instructive, Fraser Singh. By the way, Fraser, if you don't mind pointing out, how was it that you were able to get the content? Was it recommended by YouTube or somebody referred it to you? I will just like to note so that I know what's the pattern of the people who are joining in new. Okay, Jill Singh found on YouTube. That's nice to know. Okay, guys, I'll sign off now. And take care and see you in the next one.